does everybody in the world seem so divided? Why's everybody gotta hate each other? Who decided? If I took all the world's pride and all the world's money and wrapped it in a blanket and put it in a buggy, could you see that maybe that baby was just the same as you are? You know it's never been easy. Every day for everybody ain't breezy. And I hope you realize when you look into another person's eyes, you know today would be a very good day just to have a good day. You know today would be a very good day just to have a good day. With a little more love and a little more laughter, a little more good vibes, less disaster. You know today would be a very good day just to have a good day. All day long. All day long. Good days, please come more often. Everybody's in the streets out coughing. Smog in the air, gonna send you to your coffin. Plastic everywhere down there with the dolphins. Everybody was born to a mama, so everybody is connected like karma. So disconnect yourself from the drama. Everybody's trying to heal like trauma. You know it's never been easy. Every day for everybody ain't breezy. And I hope you realize when you look into another person's eyes, you know today will be a very good day just to have a good day. You know today would be a very good day just to have a good day. With a little more love and a little more laughter, a little more good vibes, less disaster. You know today would be a very good day just to have a good day. And I say, hey, hey, put all my troubles to the side. And I say, hey, hey, thank God that we're alive. And I say, hey, hey, put all my troubles to the side. And I say, today would be a very good day just to have a good day. With a little more love and a little more laughter, a little more good vibes, less disaster. You know today would be a very good day just to have a good day. All day, hey, hey, all day long.
Especially on the Nasdaq. If you got a long entry on the Nasdaq this morning, I'm sure you were round tripping. This is the meme of all memes. I think it was H-Bag that posted this inside the meme section. Is it meme or me? I prefer meme, but I guess the world does memes. What's going on, everyone? I hope you are well on this wonderful Wednesday as we get ready to go ahead and do what we do best, and that's take a look at the markets and make sure that we're able to put all of these pieces together and stay on the right side of, across markets. All right, let's go ahead. I love this over here. Enjoying other people's gains and wants everyone to win. What an absolute tremendous community that we do enjoy together. Bull markets, bear markets, trade each without bias. Even on the buy side alone in a bear market, a wonderful thing. Patience. Patience loves volatility, especially when the markets trend with volatility, and enjoys the maxis, debates, picks no side, just enjoys it all. Here we go, everyone. Let's take a look at what's going on. We'll start off over here, and we're going to get into, obviously, CTM 2.0 positioning. Only on Bitcoin, only CTM 2.0, and buy side only has taking long trades. BTC 107 and 108 are both on the sidelines. We'll get into it because we have a poll, 2 polls to share and to get you to vote on. But right now we're going to start off with some traditional markets, and we're going to just layer our way in across all of this. All right, me too, my brother. Enjoy. So the Nasdaq here, right? It's green on the day, again, and It continues this upward sloping rise, much like Bitcoin. And so far, though, that looks like a big wick. It looks like what is a gravestone. You can see one hanging right over here. Now, this one closed in the red. We're in the green right now, right? Here's the opposite. Flip it upside down on its head. Flip it upside down on its head. So, we had one recently, and the markets were able to, as much towards our expectations on that second day. We said, watch what happens if we take out that high. We took out the high, put in a red day, but we didn't take the lower low. And since then, we've been ripping up, but looks a little bit slightly ominous. We can see over here, you have on the right side the daily pulled up for you on the Nasdaq, so you can see it's the same bar over here. So I could go down to a smaller time frame over here, and you could see on the right side the daily at the same time. I was watching over here. This is coming in yesterday before Asian Open. Right over here, we're able to cross above and break above this trend line. As we broke above the trend line, retested it, and then we have been on the opening of New York, taking it straight up, kind of into the resistance, but not an exact touch. Definitely some space over there. If you jump down to the 5-minute, I suppose the earliest indication of something breaking down was like that, right? And then you could see that escalated very, very, very quickly. Again, here's a second confirmation of another breakdown occurring. The retest, I think, came in, and I'm not sure. I think it came in like horizontal, right? First over here, you can see that touch on the breakdown, and then put in the lower. This is a 5-minute time frame. Puts in the lower high, right? I guess you could say. I guess because this is not. This is just looking at this now. This part. Over here, you could see that you broke up and then came in for another horizontal retest, and then has since accelerated down a third big breakdown, and you can just see right there, we're into that resistance right now. I would say that this is at a pretty important place right here, the Nasdaq. Whether or not it's going to reclaim this horizontal local broken support, that looks like it could go either way. It could hold as resistance, or are we going to resume down over here? That's what is transpiring right now on the Nasdaq, like that. So was this missed? Was this the first? I think so. That's the first trend line break over there. You can see the breakout or retest, and then so far resuming up to the resistance. I mean, the Nasdaq alone during those 2 hours provided tremendous opportunity because the market was moving beautiful over there. And, Yamato, if you were bringing in, if you took the first buy this morning off of that upside with like brief but powerful momentum, you certainly round tripped it. Yeah. Ooh. Love it. Love it. Rune is the new gold. All right, let's take a look. Don't forget, just a heads up. I mean, look, this season, do you remember? I remember when we were back down in this area, and then we just made the observation that like the tide might be turning, and that we could potentially, I didn't expect within days to touch the upside, but we said seasonalities might be at our back over here. And they have continued to play out, and just a heads up, right? I wouldn't trade around it necessarily unless you see a technical breakdown. You might just be on alert here. Just be a little cautious is all. 10-year. Let's start off with the 10-year. And I'm watching to see if at any point in time we break this trend line here to the upside and this local resistance, right? So right around this area, 4.5. If we did, if that were to occur, then the momentum might be subsided. You can see that we have come down and reached that area of support that we were tracking, that dotted line. We have 2 places of support we were tracking below. We've reached the first one. So, let's continue to watch over here what happens We're giving it room to see if the current momentum continues to hold. If we were to break the trend line, right, I would watch the move. If we confirm it above the local resistance, at that point in time, I think that we should be going more or less sideways in a range. I don't know what that range looks like on the downside, but on the upside, I don't imagine that we would clear above this resistance up over here around 4.8. But I guess it's possible we could touch up into there. Jamie Dimon, Uncle Diamond, out on the horn, saying that rates are going to be higher for longer. They're going higher from where they are, and we'll see about that. I wouldn't trust Uncle Jamie or anything that he says. And well, Drunken Miller, right? He was able to get on the right side of that, and let's go ahead and take a look at what was he doing the 2-year? Yeah, Drunken Miller's 2-year. Drunken Miller in early before the breakdown over here. Drunken Miller in around this area over here, and this is his bread and butter, by the way. Bonds is his bread and butter. And so far, he's got a strong entry into a position of power. We'll see what continues to transpire as far as that particular trade that Jamie's holding on to. I'm going to have to go back and forth. So the dollar so far bounced. Hey, that's kind of neat, right? So the dollar just bouncing off of that support. I wouldn't read anything into that just yet. But I wonder if you just clone that trend line we have and then bring it down over here. Let me come down and check a look at what's going on in the little time frame. Looks like it's actually like there, right? So it looks pretty strong. We're going to continue giving it room. If we break this lower trend line here, then I think that we're coming in to test around this area over here, whether or not it's in this area that I'm drawing in. But there's a good chance of that. We need the breakout of the outer trend line to see any potential opportunity for some type of reversion, mean reversion. I'm not looking for like this to spring back up. It could, but if this line broke, then maybe we're coming to test this line up here at 105. As long as this trend, this momentum continues to hold, well, the odds favor us breaking down this support and taking a test down towards the 101 area. Same thing with the bonds that we were looking at on the 10-year. 10-year has the momentum to the downside. We're into an area of support. As long as we continue to hold these areas, that momentum is bid for bonds, but that could change, and it doesn't mean it's a trend change. It just means that we could be consolidating in a sideways range for a bit. Markets go up and they go down, but they also go range bound, so we want to just make sure that we stay aware of it all. Let's take a look at what's oil doing here today. Oil's breaking out of that first trend line break. So from afar, OPEC has a meeting coming up like very shortly. I don't know the day. And there's a concern by speculators that more or less they're going to look to weaponize oil. Now, that's just one thought out there, and that might be the bid that you're seeing take place here right now. Likely, they're not going to do that. It was, don't forget, the U.S. and it was the EU who went ahead and weaponized the financial system, confiscating Russian central bank reserves, as well as sanctions to like all over the place, whether or not it's Iran, North Korea, Russia, blah, 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 blah. They weaponize the financial system. I don't think OPEC's going to do that. If they did do that, obviously we could see even what would be a technical breakout occurring above this area. I would be watching what happens into that resistance. It's a trade though, right? Closing above this trend line, you got like the speculative news at your back, but that could very well be and likely to be a no-banger. And so just be nimble on that one if you are watching oil at all. Gold is continuing here, looking to close towards its all-time high. So I think we have 2067. I'm not sure. We looked at it yesterday. It's just for knowing. Yeah, no, right over here. 2063, and into resistance, no doubt right now, taking a look at that resistance. But as we continue to see, and we'll talk a little bit more about other things happening right now in the beginning of this session that is completely related to gold. So we'll just fall back to gold in 1 second, right? Silver also right now, taking a look at horizontal resistance. We should draw that in. I'm going to go ahead and just bang that up over here really quick. And then you can see over here that right now we're into that area of resistance. Be beautiful, getting a chance here to make it above. We'll see what happens. And before we get into Bitcoin and crypto and everything else, let's just continue here, taking a look at some things that we have lined up. So this is coming off of, I think this slide should have been first over here, but we could see in this area, like this was October the 6th. October the 6th, we talked about, it looks like that we could see yields peaking, right? And that and the same day we talked about the dollar peaking. I mean, we nailed it. Just trying to jump back over here to the dollar. October 6th, right? Right over here. Yields and potentially dollar peaking. Trade both sides without bias. And you don't always get it right. This is a technical breakdown. It was faded. The mistake was this. This is a big mistake from my view, my part. And I don't even know if I'm on the right view over here, but whatever. Once we reclaimed, here's the breakdown. Once it was reclaimed, you see how we flipped it and tested it as support? This is a great entry, in my opinion. And why this kept us on the right side, there's room for improvement. That's what we're looking to do. But that did help. That mistake is what led to recognizing and seeing what was happening over here when we did flip that into support. So mistakes are good. Mistakes are where you get to make the improvements, but we try to make less and less of them, as we continue here on this journey. So at that time, we called about what was potentially taking place over there, right? And bringing it up over to here, because since then, you could see that we're looking at real yields coming off. And what was said at that particular time, if we do see a bid into bonds, let me just come back over here, it could be good for risk, right? If we see that bit, and that's what's happened. Bitcoin is riding off of, obviously, spot ETF dynamics, but is also correlated with the markets as well. And you can see the Nasdaq over here, right here, real yields peak. They start accelerating down, and then boom, risk did run. So we were right, October the 6th. We literally nailed the very bottom. Beautiful. So what happens from here? Well, we were just talking about a little bit earlier, the potential that if we get any type of, let's come back over here really quick. If we got the momentum on our side, but if we kick up over here, or on the dollar, if we kick up over here, at that point, I don't think that that's a trend change. I think that we could see, potentially just even a move up to here on the dollar, right? And we talked about as high as potentially that we could go on the 10-year, but it might not be that high, right? It might just be like, and if that's happening, then we may see just peter out a little bit. We could see the same thing happen over here before the next leg down begins, right? Like I'm just envisioning, like we have the current momentum going this way. That could continue. Or if we kick up above this line, maybe we go sideways, maybe we form some type of bearish continuation pattern, and then on the breakdown, if that were to occur, that's when we could see the next acceleration, the next leg up on risk. Again, we still have the momentum rolling over this way. If it changes, expectations setting them ahead. Global liquidity also, look how closely global liquidity tracks. The blue line over here is tracking with real yields inverted. This is U.S. Treasury tips, real yields, and you can see that they are tracking very, very closely. And that's likely the largest contributor to that is the dollar rolling over. Right here, what you're seeing. And again, it was the dollar that we called the potential. We don't have a crystal ball. The potential topping October 6th, and the dollar has rolled over, and you can see that being priced in with the global liquidity as well. Gold over here continues, and Peter Schiff is getting frothy. He's loving it. He's loving life right now. He's calling impromptu live streams because he's excited, and he should be excited. It looks like that we are have. Well, by the way, look, when did this bottom? No, I'm looking for October the 6th. Yeah. A little bit ahead. Not October, a little ahead. But what I'm getting at over here is that this is contributing to the rise in gold as we're seeing the pressure from real yields coming off. It is. I was looking at this yesterday because we were talking about this in the discretionary channel a long time ago. This was done on normal CTM 2.0 template, and it was a solution trying to look at triple leverage gold miners. And the takeaway was this, that unless we come up with a time to pivot towards these miners, it's not a good solution. It would be a good solution if we saw gold breaking out into a secular bull market, and then you were going to see miners run, and nothing has changed. Two things have changed. I wonder what this would look like on an X template. Obviously, there would be major room for improvement, as CTMX has offered generally across the board. I only on the daily on stocks have I seen like CTM 2.0 on par with CTMX. On the 1 hour, major improvements. This is on the 2 hour for whatever reason. But you can see it, as that move in gold taking place, a banger of an entry right now taking place. But unless we had some type of crystal ball to know when to focus attention towards a certain asset, I think that the best way to go is to stick with really what we have largely across the board, and that is the solutions we have across crypto and across stocks. Nevertheless, just bringing it up to plant seeds, and as a reminder for everyone else, if we have it in one day, when we have the capacity to just we can only focus our attention in so many areas, right? So this week we have coming up on to, I guess that's not a non-event, China manufacturing, by the way, coming up this morning in Asia time, right? Below 50 is contraction, above 50 would be expansion. That's not a light event. I don't know how to interpret that ahead of time, though, what's going to happen. But be aware that we have tomorrow unemployment claims, and then we have on Friday Powell scheduled to speak twice. There has been a little bit change in the market. We saw one of the Fed speakers yesterday saying that because inflation is coming down, maybe rates don't need to be held higher for longer. And this is a notable change in the market, now pricing in almost not a 50-50. It's leaning towards a pause through March, but now almost neck and neck. That's a notable change. So watch that. The employment data, not just this week, but especially next week, when we have non-farm payrolls, we have JOLTS, a big data dump coming next week. We got I don't know what I'm doing here. Okay. December 8th, non-farm payrolls, right? Previous day, unemployment gains, ADP, that's what I was looking for, and JOLTS. So next week is going to be a major importance for the market. It's the most important thing taking place. And remember, it's the one thing that could change our overall view if we were to see a strengthening in the job market. And I don't think that's happening. I think that actually revisions month over month going back continue to be lowered. We continue to see that downward momentum. I think that's going to continue. There could be a little bit of noise around holiday and holiday hiring and whatnot, but I think that that's the only thing, and hat tip to TXMC for pointing that out and what was needed for a soft landing that remains on the watch to know when we're wrong. But this is a notable shift in market pricing, and May is now largely priced in for the first cut. And once again, we did a fantastic job knowing when the market was mispriced, talking about that it was priced too loose, it was going to need to be price tightened. It had got for one day priced all the way into September as far as the first cut, but largely it was July and higher for longer across all the. I did for like a couple of weeks was doing Twitter Spaces with these different people, and I didn't find it very, let's say, fruitful for for time spent. And now that we've months have passed, almost every single one of them that was on the wrong side. So just good for what we're watching. A couple of things to talk about over here. We'll start off with this though, Charlie Munger. And Charlie passed away yesterday, and a couple of 10 different quotes. Let's just go ahead and talk about them together. Number one, spend each day trying to be a little wiser than when you woke up. I mean, we talk about incremental gains as far as our knowledge, and that just compounds, and we do it here. This is our arena, and as you spend the time, and as we spend the time, and as we continue to work together, it's natural. You don't really realize it, but I look around me and I see that collectively our knowledge continues to really head up and to the right. And what that does overall, then that everyone's able to contribute more and more, and we just continue that pace. The best thing a human being can do is help another human being know more. And I thank each and every one of you who are always helping me learn more. I really genuinely mean that. And you all do it in the kindest, nicest way. It's remarkable how much long-term advantage people like us have gotten. We're going to leave that one. In my whole life, I have known no wise people who didn't read all the time. So I think that, which is entirely true, I think in today's day and age that video is a really important medium. Podcasts, audio are a really important medium. If I am reading a book or listening to an audiobook, it's the same net thing for me. And that continued learning, and again, even time spent on Twitter, like we're reading right now, it's very important. I think this is more towards that push of continuing to acquire knowledge. I never allow myself to have an opinion on anything that I don't know the others. Well, this is Charlie. I don't allow myself to have an opinion on anything that I don't know the other side's argument better than they do. Well, I sure do. It's how I learn. So, I'll often debate against people, not debate in a bad way, but enter into conversation and taking just the other side in order just to learn more. So I think that's healthy. The big money is not, this is obviously Jesse Livermore. The most money I made is sitting on my hands. The big money is not in the buying and selling, but in the waiting. Long-term investor, as in Charlie, this is the way to go. You don't have to be brilliant, only a little bit wiser than the other guys on average. Meh. The first rule is that you really don't know anything if you just remember isolated facts. Okay. The game of life is the game of everlasting learning. I can't imagine ever not being here. I can't imagine ever quitting. The financial markets are a tremendous arena. One of the main reasons I first got into the markets was for the challenge they offered. The challenge and the freedom they offered, and it's absolutely fascinating. The more you learn, the more there is to learn. I mean, people play all sorts of word puzzle games to stay sharp, and how could you imagine We're really blessed. So that was fun to do, right? I agree. I'm very much on that tip over there. Lots of love. I appreciate you all with the greatest love. Number 6, I'm going to come back to it just so I know what that was. Yeah. Number 6, I just want to see what. The big money is not made in the... Oh, this is... Thank you for highlighting that. So in CTM specific, right, the waiting between the signals is so important. As well as in Cardano right now, holding that open trade is a really good example. As the trades that go on to profit, it's just that like they're held open for a long time. Push your winners. They continue to roll into profit. The waiting takes place on many different avenues. All right. By the way, update on yesterday. We saw the Franklin Bitcoin ETF, right, was delayed. That was delayed to March. They were not supposed to respond to January, and they kicked the response back to March. So there's the speculation that decreases the probability of a January ETF approval. However, it is notable that even though they were super early, they weren't due until January 1st, that Franklin is the only issuer who didn't submit an updated S1. Wonder if that had any impact over there. So it makes sense if they hadn't updated their application and like, okay, if you're not interested, we'll talk to you later. And anyway, we'll just leave it at that little bit of information for us to take into. Bill Ackerman, and just hold on one second. We have to like call it as it is. Bill did this way better than the way that we were viewing this. This was the breakout of the descending channel and buy up, get back on the right side. There was a sell impulse over here, likely wrongly played, but played. Short, back on the right side, long. And then it was a banger of a trade. So it was a beautiful trade. And Bill went short bonds here, and Bill exited here. He just crushed the trade. Amazing. And he's saying that the Fed has to cut in Q1. Q1, first quarter 2024, January, February, and March. What's happening is the real rate of interest. Now, I don't know. I don't think this is real rates. But what he's using the term the real rate of interest. I don't think it's to be confused with real rates, which is what impacts the economy. It keeps increasing as deflation declines. So what he's saying here, rates have been elevated, and as inflation's coming off, those rates are having more of an impact, and because of that, the Fed is going to need to cut. He's probably correct about that. We'll continue to watch. This was a chart that Ben released yesterday, and he's talking about going back to the early 1960s. I think he meant early 1970s. Big deal. No, I mean, like, I'm just trying to figure it out. It's the largest year-over-year decline in the price of new houses. You can see that we've finally have ticked down over here. The first thing I did was look at the relation to the S&P 500, which he has marked in blue. It looks like every time that we've had some decline in year-over-year price of new houses sold, not of new houses sold, that the markets soon then rocket, right? So over here, decline, markets rocket, decline. Over here there was some trouble. It wasn't as steep. Here's a big decline back into the great financial crisis. Markets rocket. I don't know if there's something to read into, but I had it up there to share. I don't know if are you talking about this, Benjamin's post over here, whether that signals a recession. I mean, the yield curve has inverted. That's like the sign we did. And again, real time is where it's at. and it's the most difficult thing to do. And we were talking about in real time how I felt like before the breakdown of that first trend line, how I felt like we were in this area over here. Right, over here. And thus far, we continue accelerating down. They continue to line up really well. I'm not going to pretend like I know what happens next. So we'll continue to watch and see, because I don't know what happens next. And as yields come off over here, like the question is well, and cuts are being priced in earlier, well, that's not good for the markets, the equity markets here. And you're like, Jordan, there's plenty of runway. That runway begins to dwindle if they wind up cutting in March. Remember, we said cutting in March is likely not a good thing, and the markets likely won't be responding well. If they are cutting in May, then we have over here 6 months of runway, and usually the first cut is benign, so, through the summer. But if that changes to where we do cut earlier, well then, we said yesterday, same thing we said. There could be some turmoil in the markets, no doubt. However, it matters most, in my opinion, is this. Well, I'll just tell you. I don't have it up. What matters most to me is one more. What matters most to me is what type of intervention, if any, is taking place. And if they are, remember 2019, they cut 3 times, 75 basis points, and equity markets literally melting up. Let's take a look at that. And just so you could have that reminder, this is 2019. This is the equity markets, September, right here. They begin balance sheet expansion. They cut 75 basis points. Let me just throw up the Fed funds. So you can see them cutting 75 basis points here, and equity markets literally melt up. So when people tell you that rate cuts are bad for the market, generally speaking, yes, but it matters what they're doing with the balance sheet at the time. And at this time, look what they were doing. At that same time over here, as they begin cutting September 19, keep losing it. Here's the cuts. Balance sheet expansion starts. Equities melt up until we have global lockdowns and all that story. So what matters to me is not only the cuts, but is there any type of intervention taking place? And that's months away. None of us have the answer. That's why we need to continue to monitor it in real time. Maybe, Alpha Mike. Maybe. Hold up, but if not now, then for sure. Sometime soon. So hold on, let's continue over here. And we continue to see, obviously, reverse repo being drained. Looks like by February that should be down to 0. There is the I don't understand it, but there is the caution that at around 750 billion, that is practically the bottom. I don't know what that means. I don't understand it. That's why we have it up there as a reminder, just to watch and be aware. Maybe because that means that because of Treasury new issuances, that takes us down to 0. But I don't know. I don't know. I did see that all of a sudden we got yesterday another new batch of new issuances. Treasury continues raising it. Guys, this was 151, a banger of a call here against sentiment. It was actually the day of the Bank of Japan announcing that they were printing money to fight inflation. All of crypto Twitter was like, oh, short the yen to oblivion. This was a good call, and the reason being here is because we talked about the relationship to U.S. yields, and it looked like U.S. yields were catching a bid. You have over here just a nice reminder. By the way, this says the yen won't sustain any bid it gains from the Ministry of Finance abstinence. And this move that's occurring on the yen is occurring without any intervention from the Bank of Japan. Okay, so I don't necessarily agree with that, but I always want to know what other people's thoughts are. Ultimately, the US dollar Japanese yen is always and everywhere a derivative of US yields, exactly as we called it out. Exactly as we called it out. So for me, it has more to do with what happens with US yields than whether or not we see or any intervention, but we'll continue to watch over there. Aldo shared in I think it's in the macro channel. He shared this write-up over here on Substack, I believe, about the Bank of Japan tsunami and its thoughts about whether or not they are getting ready to change their policy to a more hawkish stance and what the results will be, future outlook in 2024. I will go ahead and also add it right here into the chat if you want to take a look at it and give it a read through. I'm leaving it up here. I skimmed through it, but I didn't get a chance to read through it. Since we're having a little fun today, a couple of things I have highlighted over here. Number 6, going back to 1997, the S&P has returned 500%. Man. CTM 2.0. If you remove S&P returns on FOMC day from your data set, and you also remove the one day before FOMC, that's a total of 440 days since 1997 at a 6,750 days. Then you would be trading at the 2000 level, a 55% lower than current prices. So basically what it's saying, you're trading 55% lower if you remove the day before FOMC and the FOMC day. I wonder if, like, those are 2 days that we should focus in on discretionary, right? Like, up only, not always, but I mean, we could be highly focused on those days. That reminds me of the Unknown Market Wizards, and it was this one trader who had, like, CTM X aside on CTM 2.0, had basically the same Sorrentino ratios as us. He went really big on a handful of days a year. I wonder if focusing on those days might be worth our attention. So I'm just trying to plant seeds of my own. But without the other days, forget the 440 days, without these days, even though you're still missing 45% and you're missing massive compounding. Apple averages $1.1 billion per day in sales. Oh my goodness. $312 million per day in operating income and $260 in capital returns. Wow. Look, this is so important. If you would have bought Apple stock instead of every new issue iPhone along the way, today you would have around $147,000 in your trading account. One of the biggest mistakes I made in my life was in the early 2000s. Buying stuff on Amazon. If I would have everything I'd purchased on Amazon, bought Amazon stock, it would have been a beautiful thing. And that's just a long time reminder. This is the type of stuff that should be taught in schools. The importance of long-term investing, the importance of compounding. If you know anyone young in your life and they have so much time ahead of them, if you could get them to understand that, you are then, as Charlie Munger pointed out, imparting wisdom is one of the best things you can do. You are doing a fantastic thing. He didn't mention anything about likes, but we are totally light on likes. If you want to light up the board, we'd be appreciative of that. You can see over here real interest rates, which is why I don't think that Ackerman was talking about real rates. You can see that they have come down sharply since the summer, and we're seeing that risk, right, doing its thing. The CTM 2.0. This is not forgotten, Alpha Mike. All right. First things first, and we did a little poll this morning, like wondering who's trading what. Are you trading CTM 2.0? Are you trading CTM 2X? And there's probably like a 8-to-1 ratio of people trading CTMX. I had no idea, so this is really good information for me to know and see, and interesting to me. If you didn't vote on this poll, it's in the notifications where the announcements channel is. If you could continue to vote on this, I would like to really know. Bastion pointing out, we check out who's doing BTCX 107, 108, and I'm a little bit surprised by this. We have a 6-to-1 ratio, or 12-to-1, 11-to-1 ratio, because we got Dinobot voting on this. Most people are trading BTC 107. I kind of expected it would be the other way, that most people will be trading BTC 108. So that's interesting to me. I'm trading BTC 107, but I didn't know other people were. We see that CTM 2.0 on Bitcoin 8-hour has taken a long trade over here. BTC 107 and 108 are both out of the market. It's interesting to note, and the buy side took the same entry. So buy side only on 8-hour took the same entry as CTM 2.0. So again, this will be one of those instances where we get to see real-time analysis how CTMX is acting in unison with CTM 2.0. If you go back to the start of 2022, the bear market until today, CTM 2.0 doing a nice thing, 146% is a lot better than dollar cost averaging any way you look at it. I mean, it's massive. But you can see BTC 107 has a nice edge on that, specifically in drawdown, right? The return is obviously much improved, but the drawdown. I mean, BTC 108 is crushing it. 280, it's absolutely crushing it with the same drawdown, a less of a drawdown. The stop loss on BTC 108 is 13%. 13% on the buy side. By the way, since that time, the largest stop loss, or the largest, has been 6%, less than half of what the full stop loss is. If you go back and you check to 2014, the average stop loss on BTC 108, a lot of people trust in the system to get them in and out of trades. The average losing trade is only 1.95%. We should do buy side only just to get an idea here. Hold on one second. With the 13% stop loss, the average losing trade is 1.92%. Wow. The largest losing trade didn't even take the full stop. 10 point. I mean, interesting, right? I guess all I'm trying to do is make the case for BTC 108, seeing that most people are trading BT 107. And I mean, not trying to like influence you. I'm trying to just help you unravel the data, right? And it's beautiful. It's a beautiful thing. But I do stick with, I'm just making sure I have this correct now. I stick with BTC 107. And then you see forsaking returns, right? I'm aware that BTC 108 data has it that it's likely to outperform. Since that 2000, buy side only, 109% with a 9% drawdown, including the 2022 bear market. Ethereum over here is out of the market on both CTM 2.0, CTMX, and continues waiting and watching. The only one in the market here is Cardano, and Cardano is taking more gains than yesterday, up at 34%. The waiting that TK3 pointed out earlier is what it's about right now, whether you're in the trade waiting here, Cardano, allowing it to play out, or you're on the sidelines waiting for the next entry. Cardano here on CTM 2.0 is tracking the same thing as CTMX with that open gain over here. And you can see this entry occurred at the end of October. It continues to ride now over a month. We want Cardano, Solana, same thing. This is on X over here. You can see, I was pointing this, I mean, this is on Solana, and you can see the only window for entry occurring at our entry. Now, this is forward tested. This was not produced ahead of time, but I wonder, was that luck? I mean, it can't be that good. So imagine that we didn't have a entry for a window for entry, and missed the entry, and this trade, this banger of a trade took off. It could happen. So Ace was wondering, maybe the JV filter might be set a little bit too tight. Interesting, just things to bring to our attention. We're trying to figure this all out, we don't know. And you just go into the dashboard. You just go into the dashboard over here. You come down and you go to Bitcoin right over here. You go Bitcoin right here. And you click on the chart and it'll have both options. It'll have BTC 107 on the left and it'll have BTC 108 on the right. And that's how you could go ahead and compare them. Go over all different periods. Go back all the way as far as you want, whatnot, and all that. And that's important. So as far as, let's take a look over here and let me pull up a view like this. Bear with me as I try to figure this out. And I'm going to try to, maybe I can move this to the back. And then pull up the 3. Right? And then I'm going to just go like this. All right? What I'm looking for, the Simon. Woo! My brother, thank you. What I'm looking for, I'm not on par with what you are referencing. I'm looking for the buy side boost. And the question we had regarding watching the video, not getting it, and let me just give you a quick view of that. So what the buy side boost does, and it's meant for those that are trading the buy side only without any leverage. That's not to say that it could not work and does not work if you're trading the buy and sell side, right? Because if you're trading the buy side boost, the returns outperform the buy and sell side. If you're trading the buy side boost in conjunction with the buy and sell side, then likely the returns become bazooka. I don't need to overwhelm. There's just like limitless options out there. This is something Phoenix Fire has been spending a lot of time with now, many months. And he was looking for a solution, how to make better use of his capital. And, he had the option of going 1/3 of his account or 1/2 of his account into Ethereum and 1/2 into Bitcoin. And then he had the option of doing 1/3 into Ethereum, 1/3 into Solana, and 1/3 into Bitcoin. And then what he noticed in spending all of this time trying to figure it out and trying to make better use of that capital was that when he gets an entry, let's assume that you're out of the market right here. Can I line these up a little bit better? They should be lining up. There we go. So follow the crosshair, and right here we're forget the sell side on Ethereum because we're doing buy side only. You're completely out of the market. You're not in the. Let me zoom in really close. All right, you're out of the market. You're neutral. 100% of your account is on the sidelines. Over here on Monday, October the 16th, you are able to get a signal. Bitcoin is entering the market. Instead of taking 1/3 of your account to place that trade on Bitcoin, you go with 100% of your account into that Bitcoin trade. Then you can see price continues, and a few days later, Solana enters the market. What do? Well, you take 1/3 of that full position of Bitcoin, you exit it. So he just locked in profit. He just locked in profit and made better use of his capital. It could go into a loss, but in this case, it works into profit. And then he has now 2/3 of his capital in Bitcoin and 1/3 into Solana, and he continues holding that until this day over here. A week later, Ethereum enters the market. He takes another 1/3 of that 2/3 of Bitcoin and he buys Ethereum with it. Now he has a 1/3 position, a 1/3 position, a 1/3 position, but that capital from over here was put to use. He took profit on Solana and he took profit on Ethereum. So it made amazing stuff. So that's how it works, right? Now, with that in mind, if you go ahead and you watch the video, you might be able to, it's June, similar thing, right? So here's the loss, right? It's a small loss. I think the loss is 2.7. I'm not sure what it is. But you enter the full position in Bitcoin over here, full 100% of the account, you take the loss, right? You can see full loss. Now over here, you enter Bitcoin again, 100% of the trade, right? Now, a couple of days later, or a day later, you enter Solana. Now you took massive profit on that 1/3 that you enter Solana with. And then look at this. Bitcoin from here to here, from where Ethereum enters, you also took that extra profit. So I hope that's helpful. John, I don't know how else I could. I hope that's helpful. With this in mind, watch the video again. Yes, Andrea, and I'm going to add it to the dashboard. I'm going to add that. You won't be able, I don't know what's going on. If anyone is on Safari, everyone on Chrome and other browsers could see these videos. I can't see them. I don't know why, but I could see them on my Chrome. So whatever. I have to fix it, but it's not that high priority. What is a high priority though is me getting out the CTMX alerts in Discord, especially with seeing that so many people are focused in on CTMX. That's a high priority for me, but I have to add yesterday's clip. We talked about what was happening with that question that you're asking, Andrea, and long story short, when this is Hey You was able to add this incredible table in the bottom right on top of CTMX. And what it does, it helps you know when you're closer to an entry. Because right now on Ethereum, for example, start with Ethereum, right? You can see that, well, the buy side deviation, the green one's above the 0 line. Why am I not in the market? Well, you can see that the JV filter is active. You can see that the CTM filter is not, and ST1 and ST2 are not. When all of these are active, you will then get the bolding of the deviation to help you know that you have a potential entry coming up and on the way. My Chrome is working. It's my Safari that's not. When I was little, when I was like in 5th grade, and then like they would have these like pet computers. Like computers were like a very new thing, and like the teacher would always like they'd never get it to work and always ask me to fix it, and I'd just partially start and the thing always worked. And early on, dealing with Windows, speaking of 95 and you know, these days though, whatever. It's so difficult to keep up with all this stuff. But I need to figure out, I would like to obviously know, but more important to me is if anyone else on Safari is able to see the videos or not. And if no one's using Safari, then all good. These days, I use just Safari and Chrome. Anyway, for a long time, I used to use, Brave. All right, I think that's it. Those were the fun days. I think we got a strong look at what's going on here across the markets, except Bitcoin and Ethereum. Let's take a look at what's going on here. And just much like the Nasdaq is in that upward sloping channel and holding on, Bitcoin is as well. It looks very healthy over here, specifically above this last notch, right? Resistance, We peak down, holding it. So we have like potential lower highs being put in the market. We still need to make that run up to higher highs without breaking what I'm highlighting over here. It looks like that the potential here for this to continue consolidating here and upward sloping to break out to the upside. Close below here would be expecting some more further pain downside, I imagine. Ethereum, much the same. And, I mean, is the dollar right now largely contributing to these moves? We see the dollar this morning here not helping out, not like bouncing a little bit. It might be a dead cat bounce, but bouncing nevertheless. And we talked about that little bit of trend. And if this were to break out, then likely Ethereum and Bitcoin are rolling over from those areas of support we talked about. And that's it. Thank you, Craig. I love our daily sessions here. Just continuing to push forward, and there's so much work to do. It's ridiculous. Just to catch up, there's so much work to do, and that's because we continue to climb at a rapid pace. And everything has its time. Everything has its season. When we went through the massive creative phase in 2022, and then spent a large time in early 2023, just like consolidating those gains, plateau, right? Working on discipline, focus, psychology, execution, and then like coming out of that plateau, like expansion, going crazy. You know, we'll get to a point in time where we get to plateau again. Those are important stages. They set up the move for the next expansion up, just like the markets. All right, everyone. God bless you. Beautiful session. Have a great day, everyone. I'll talk to you soon.